Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 22nd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. I'm showing a little bit more of the chart here in this view, but what you'll notice here, that's 2800 here, and that's the recent low. And if I bring it all the way across, the recent low is 27.9975. We talked about 2800 being very important near term, and it turned off of that level by one tick and reversed. Had a pretty solid bounce, but again, still below 2900 here, so near term weakness still in play. And if you look up here, the 2950 zone, it got as high as 2960. That's the upper end of the current range as well. So we have our high, our low, and we have kind of our key level in the middle between that zone. Over here you had the exact same zone that played out just before it broke down and worked lower. Again, this is going to be very important. Does it hold 2800 on a retest, or does it reject that level? If it comes down here and shows a massive rejection, perhaps we could retest the highs very soon. If it comes down through 2800 and fails, perhaps we come down another leg. Maybe 2600 could be next. So again, I wanted to show the market structure that's currently at play. 2800 up to 2950 to 2960, that's current range, and that's also where prior price action took place. We'll see what happens from here. Now in the very near term, that's a higher time frame view. In the very short term here, we're compressed. We're trading without direction, without conviction, without volatility. The volatility has dropped to a 5-day range average of 40.4 points. That's a 5-day average. It had been at 47.0 points, and that was on a 10-day basis. So it's dropped tremendously on a 5-day range basis, which means near-term volatility has shrunk, which is completely the case. We still have formed a lower high below 2900 and continue to hold below that 2878, and that, after this hard push down again, may suggest that we have another round of weakness to come to at least retest this low. A rejection there, that could turn this thing back around and retest the highs. So right now, very hard to tell. It's compressing, it's going back and forth here, and so at the moment, got to continue to let it play out and see which direction it's going to take. Overall, we have some key levels to watch. 2800 is going to be the most important key level down below to watch, as a rejection there could easily lead to a retest of these highs. A failure there could lead another couple handles down into 2600. Okay, let's take a look now at the NQ. If you look at the NQ, again, it's very similar price action, very near where we played out before. So if you look at 7290 here, bring it across, or 7200 and bring it across. Up here at 7800, right? This is where we played around last time before we dropped, and now we're inside that zone again. That's the market structure there. So 7200 to 7290 is going to be very important. That's below this key range low. So if we come into this key range low and test it, what happens here? Do we reject those prices? Because if so, we return back to 75.81 very quickly, with a shot to go all the way back to the recent high, 78.72. So that's the bull scenario right here. But after this sharp decline and this pullback and lower high, it's not out of the question that this thing would break those lows and continue downward. In that case, we have these downward expansion targets to work toward based off of the impulse sell-off. So again, key levels to watch, still compressed, but very difficult to really do a whole lot right now. Still a downward bias at the moment. All right, let's take a look at crude oil. You'll see crude oil has been very, very sideways in this range. It's been very quiet. The recent 3 to 4 day compression is very, very, it suggests it has a lot of energy to release soon. And right now we are testing the lower edge of that range at 62.50, and we're actually forming a little bit of a compression below 62.70 in the 15-minute chart. So any push back above 62.70 on an intraday basis could open up an outside day up scenario where we close perhaps above 64s. Today is crude oil inventories, So crude oil inventories come up at 9:30 p.m. Central. That may help spark directional conviction here, but above 62.70 in the short term could open up a nice intraday rally. Failing to get back above 62.70 opens up more downside toward 61. Lastly, taking a look at gold futures. Here's gold. You'll see with gold again, I want to mention the higher time frame pattern. I'll stick with that for right now because the intraday right now can be everywhere, up and down. It's been very, again, down, up, down, up, down. It's just been back and forth. And right now it's at the current edge at 1270, which is the new key level to watch. We have a rounded top pattern with a flat bottom. Again, this type of potential is there, and so is this above that 1305. And so most times this thing really needs to just be given the time to try to see a breakout or fail in that attempt, and that will give us the directional cues we need. At the moment we're kind of coming up between, right in the apex of this pattern, chopping around value. So holding 1270 would suggest we bounce back toward value in the very near term. Failing to hold 1270 suggests maybe an expansion day or an attempt to break to the downside. So continue to watch 1270. Right now, very minor inside day with 40% of ADR traded so far, heading into RTH. Again, upside bias toward VPOC is likely here unless price cannot hold 1270 any longer. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I will see you in the trading room. Take care.